face of the team.
All right, ladies and gentlemen, welcome back. We got another episode of Chart Talk, second one of 2023 coming at you. We have a huge CPI report Thursday. We'll touch on that in a minute. Ben and I just got a pretty enticing offer that I wanted to show you.
Okay.
TradingView just sent me an email for the world's first trading watch.
Oh
What
God.
it does, it lights up when the market's open. And it doesn't when the market's closed. You like that? I mean, pretty enticing. Only 500 made. What do you think? What do you
I
think?
mean I think they're kind of copying us with our 100 made. With ours don't light up though, but
Yeah, well, I mean, look at that. Already,
we got some competition. That's pretty cool that
you're getting, they're putting you out of business.
But I mean,
Interchangeable straps, global market tracking capabilities. This is making you look like shit over here.
I mean, it's making us look like shit. You are a part of it.
When we win, it's us. When we lose, it's you.
Okay,
All right.
that's
All
fair.
right. All right, let's get into the market outlook here. I got the S&P up. All right, Friday, big jobs report. And, we've been stuck in this consolidation right here for the past couple weeks. Now, was this the last CPI when we were up high here on December 13th? Yeah, so that was the last CPI report. Came in light, market gapped up, and that actually created the next down move. It was a sell the news opportunity where we gapped up crazy, sold off viciously ever since. We've been in consolidation, and now we're starting to bring it to the upside on that jobs report. Now, the jobs report we touched upon last week. I'll briefly touch upon it now, where pretty much gave us everything what we're saying. So the market, it's very hard for the market to have any good news right now because any good news is showing the economy is too strong and that inflation will remain high. So any good news is pretty much taken as bad news. And any bad news is somewhat good news because it's showing Powell's policies are working, but it's still bad news at the end of the day for the economy. And there's this tiny little gray space where the market can have good news. And the only way that is possible, the only space for that is this soft landing scenario. So everyone's afraid of a really harsh recession, and a soft landing would be, keeping the unemployment rate decently low, but getting inflation to come down. So then in this jobs report Friday that allowed us to break out to the upside, we saw pretty much that. The unemployment stayed low, but we also saw wage growth come down for the second month in a row after 29 straight months of gains. So for the soft landing scenario, that's the perfect little white space of news that they're giving us. So we rallied on those hopes. It's got me very a little bit bullish for the very short term. I don't think we're out of the woods. I don't think fresh bull market, but I think we're going to trade higher the next 2 or 3 weeks. But again, it all comes down to the CPI report Thursday morning, and the number to look out for is 6.7%. Now, Bennett, give me a prediction. What's your number? It was 7.1 last month, and on the 7.3 was estimated.
Okay.
Well, we gapped up and sold off. So now the estimation here is 6.7%, and we've moved higher on the last 4 reports, but dramatically, 2 or 3% higher. But we've moved lower dramatically on the previous 5 reports, pretty dramatically, 2% or more. So now the number is 6.7% month over month. Would be a decrease of 0.4%. I am personally thinking it comes in light. I think we see 6.5%, and then we get a fast move to SPY 405, 410, this area right here. So that's my prediction, and I'm positioning myself well. I bought some SPY Friday on that, and I'm trying to hold it for the macro. It's not easy with this choppy market. Where do you think CPI comes in Thursday? What's your guess?
I'm going to say 6.9. I'm going to say a little higher than expectations.
I'm getting fucking smoked in that scenario, Bennett.
Well, I'm still in your outlook of, I still think, like you mentioned, you have this little base drawn out. We've broken out to the upside of this base. I still think, like you mentioned, that we probably push that 410, and that again continues to create resistance, and then we just stay within this range in the short term. But again, the CPI numbers and that stuff is not really my wheelhouse. So, but I'm going to say 6.
Whose is it? Whose wheelhouse is it?
Yeah, I
don't know shit.
I don't know.
It's so funny. It's because we hear the Fed talk every single day, and the markets reacting to it every single day. And we get a new piece of economic news pretty much every other day, where it's like, ISM manufacturing is now a huge thing we have to look. It's just the most annoying environment
Yeah.
because every economic data point is so important, and it's so hard to have a macro outlook because we're in this ever-changing narrative environment where so now I'm trading to the long side pretty aggressively because the narrative right now was that white hot space of perfect report where it shows soft landing. I don't know if we'll have a soft landing. I don't need to make that bold of a prediction, for my trading style and to make money. And if I get into the weeds too much, I kind of cloud my own judgment. So I don't know. I don't really care soft landing or not. Obviously, I'm rooting for it, but for right now, the data is pointing to that. I'm going to trade pretty aggressively to the long side. Yeah. So I mean, that's my thinking. What do you think? Thinking for a market outlook? You want me to stop sharing?
Yeah. So I can upload my for a minute or two.
Yeah. You're up.
Okay.
Everyone say hi to Nug sleeping back there. What's up, girl?
All right. So one thing I get in mind that I'm keeping the probably a bigger focus on is just watching this 10-year, just putting in.
That's it's moving higher today.
I don't know, just again, I think I got smoked last week. But again,
Anytime that thing upticks, it puts fear in my heart.
Well, the bigger thing is again, I have this smiley face here. We're just seeing.
Yeah, it's a red smiley face. Only Higgins smiles like that.
I'll make it red. I'll make it green. Bigger thing here is I'm just seeing these lower highs, which is kind of a good broader sign, not really following the day-to-day action, but just seeing lower highs, good sign. I still think we see kind of 2.5 and 10-year in the next few months. Sector-wise, again, a lot of things have been very strong. We're seeing broadly in these little bases like you had drawn in the SPY, most of the sectors breaking out to the upside. We're seeing the small caps. We saw that in mid caps. We saw that in materials last week and going into this week. We saw even the weakest sectors, telecom and consumer discretionaries, even starting to finally play along with this bounce in the market. But everything is kind of virtually the same. We've all been in, most major sectors, major markets had this really amazing run up from October into the end of the new year. And now we had a little breakdown, and now we're just trading within this new range. And all the sectors are kind of doing the same thing. Energy is still kind of setting up here, but a lot of sectors look pretty good. It's just, again, very choppy. Friday action was great. And then today I see a little wishy-washy. So you have to really pick your spots, but a lot of that action under the hood on all these major sectors looks pretty good, at least in the short term, maybe except for healthcare. So Shake, you want to go over what do we got? Some good trades, some top ideas.
Yeah, I got some trades to go over. Let me get on my share game. Hold up. Okay. All right. So, like I mentioned, I'm in this trying to feel my way into this macro SPY trade. I'll break down how I traded it. So we got that jobs report 8:30 Friday. I began buying SPY really small when we reacted really positively. Now remember, we closed down here at 379, and actually let me show the intraday. Showed that out to regular hours. So here was the initial reaction to that jobs report. So now I'm trying to get a feeler. I said 382. I want my price to be, against this 378 low, which is the low it made pre-market. So I got in that one. We started testing resistance. These are 5% kicks, maybe less. These two are right here. I got some off. I only took 10% off on the trade here. Yesterday's strong morning, and then second half of the day, just sellers absolutely took over. Just let me get the post market out of here. So I have to, I'm market looks like it's gonna pull back on the 5, but I'm staring at the 30-minute trying to have this macro play, and we just see this aggressive selling all day long yesterday, all second half of the day. So a very frustrating second half of the day, but held strong. We bounced off this, 386, 387 area, and we see what I'm seeing. We're trying to break out of this base. We're breaking out. We're back testing it. We're back moving back higher. We get another update. That'd be nice. And then CPI, if it comes in light, that'd be a blast off here into the 400s. And then I have, a great trade on my hands. But so I'm managing it slowly, looking pretty good so far. Let me show this disaster SMCI. It's almost hilarious price action. So this SMCI, a huge growth winner. This is a name we were saying we've loved for months and months. Just upper level name, huge growth name, trading at highs, not really selling off with the market, but a high beta name that makes dramatic moves in both directions. So we get that jobs report. I'm like, all right, I'm thinking to the long side. Great jobs report. What can I buy? And I remember SMCI is pulling back, and coming off the support level, and I have a great buy, 82 versus these lows, 80, 53. I'm probably giving it 80. So, 82 versus 80, $2 risk. And this thing's leading the market. I don't take any off that first day. We get another pop. I take off some 4-1, and then I take off some above 5-1 here, but I'm only a third out because I'm thinking the market's rallying and it looks so good. It's a market leader. Market's trying to turn up to the upside. And then, that second half of the day, yesterday, this thing gets absolutely toasted. And then today it comes out accounting fraud against SMCI, major sell. And, a few hours ago, I'm selling at 93, and this morning I'm selling at 78. Like, what the hell just happened to me? So that was a real joy. But we had a great trade today in this MEDP. And that was responsible for a lot of the P&L today. Another name, just like SMCI, what do these names have in common? Upper level names. They're holding their gains. They're moving sideways. This is sitting within a huge macro pattern. And then what have we seen a lot this year and last year, really in the bear market? The best long setups that were working were these upper level names. They give us a low cheat entry. You buy it here and you sell the retest of 235. They weren't breaking out, but they were giving this huge action from 210 through 235. We were seeing that across the board, and a lot of the biotech, healthcare, therapeutics names. So this one just triggered perfectly. And again, we had we were ready for this one in the chat. We saw it. We were alerted, MEDP crossing 213, watching 215, 217 for an entry. So we're very prepared. And look at me. So I'm bought a tiny feeler yesterday, and then 215, 217. When I see that buying and I get that confirmation of consistent volume to the upside, I'm loading my position. And you're seeing these kicks. These are very small kicks. These were bigger kicks. I'll show you where we took the kicks on the intraday. You can't really trust this market too much. So I took off half. So I'm taking it off on the way up. These are tiny kicks. And then when it breaks this little 5-minute EMA to the downside, we see it. It's just supporting. Breaks it for a second. I get out of half my position, book half my gains for 2-1 winner. It gets above it a little bit to the upside again, but it just goes sideways. So I booked into strength. It was a systematic and calculated profit-taking venture for 2-1. And now I can have a low day stop, and this thing looks ready to blast off. So that's a great trade I have on my hands. There's a couple more. I think you're in this QSR with me. Yeah, this one looks great. I mean, it's just sitting in this tight little base. And the funny thing, and this is the big improvement I'm trying to make this year, and why I have a pretty small watch list right now. I was making the shakedown, and I had 32 charts I was going to put to watch out for this week. And I was like, that's what I was. And they're all like decent charts, but then I just cut it down to 12. And I cut out all the utility names, all those things. If I think the market's going to rally, we want the best of the best, and we want to be in those growth names and things like that. So, so I cut it down to only 12 names, and this was it. And that's one of the big things I'm working on this year is really, really keeping the focus of the best of the best. So this QSR looks amazing. That one, I think I might add to that above that 66.20 tomorrow. But that's it. I'm keeping it pretty light. And again, it's all about the CPI. That's really it. I have a few names I'm looking for, but I'll let you hop on the ones and twos for a little bit. What you been up to?
Okay. All right. So let's see.
Word vomit. I'm a little tired over here.
So first one again, this DCP example, again, very relevant because for most who have never been in a buyout, they're always very hard to learn from because one's the chart. Who's coming in here? What's up, Blue? Once the stock is.
You have to teach me how to do that with the quotes and stuff after. That's really cool.
Yeah.
With the bubble. Wow.
Right. So
that's
if you
cool,
actually
man.
Right here.
That is so classy.
Right. So next to like the little T. Hold on. Sorry, guys.
Text. Yeah. What is it?
And then you go to call out.
Oh man.
And then,
okay.
Yeah. So it's much easier to follow along than my ghetto typing before.
This is classy.
But yeah. So since for most
colors too. Jeez.
Yeah. So for DCP is a good buyout lesson of what to do if you get caught in one. Last Monday, we were talking about how DCP was looking like a buyout candidate, just given how tight it was trading compared to how it's traded in the past year. The daily HL was so much wider than what it had been the last quarter, and it just wasn't moving. So it just looked like a buyout candidate, and PSX came out, announced they're buying an all-cash deal that will close like second quarter of 2023, and they're buying out for $41.75 a share. So this was where, again, for those who've never been in a buyout, when you have a stock that is getting bought out, the main goal is to really just sell it the day that it gets announced. You're never going to catch this gap up unless you're already in it. Once this thing gets announced and bought out, it's pre-market, it's immediately going to be basically at that buyout price. So you can't really take advantage of this unless you're already in. But if you are in, you basically just need to sell it right off the open because it's, it might move like this. They're buying out at 41.75, trade 20 cents higher. You don't really want to be sitting this next 3 months when it just trades basically flatline until the deal gets closed.
Well,
But
yeah. Sorry to interject, but like I never understand why people want to hold. People are like, no, I'm gonna like the only bad things can happen. Only the deal is gonna get trashed. They're not gonna say, you know what, we're actually gonna double our buyout offer and buy it for 60 a share instead of the 42. It's just like so nonsensical to me. You just got a gift. Take the gift.
I know.
Christmas, take the gift.
Again, for you and me, it's like us, it seems obvious, but I've talked to so many new traders where they're like, they want to buy after the buyout. And I'm like, oh my God. But again, but I understand on their end because once the stock gets bought out, this chart is going to be gone. So it's history. So you never get to see the examples of buyouts once the deal's closed because the chart's no longer available. So I get why some people don't get it, but out of all the buyouts I've ever seen in the last 15 years, me looking at the market, there was only one name that had competing offers, and it was an oil name where the Chevron was going to buy some little company, PSX came in and bid higher, BP came in and it was like a bidding war, and the stock actually gapped up like 3 times on that. But that's the one out of
and you'd hear all 10, the news about the bidding war.
Yeah,
bidding war is all over the news.
Yeah,
if you're not hearing about a bidding war, DCP midstream, there's no bidding war. There's no bidding war.
Yeah, it's just But so that was just a good lesson for those. One of the members in the chat like, "What's short doing?" It's like just sell the goddamn thing right off the open. Just get out.
Please,
just take the overnight win. My God. But trading wise, again, I think on my end, or what I've noticed recently is we've had like these. At least on my end, I've had at least 2 or 3 weeks in the last quarter where I've had a few swings got put on like end of week, the end of Friday, everything looks amazing, and then like you kind of get like that shakeout the following day. So I had some, decent trades. I saw I have this CTBI with a stop below low day for today, still in. I have this Regeneron kind of screwed me over like your the one that had that accounting fraud.
Oh, well, I didn't know you got caught in that. That fucking sucks.
So this gap down sucked. And again, I'm always using buy stop, sell stop. So I had this entry, got me in, which is great. And I had this 720 sell stop. But the problem was when it gapped down, it became a market order. I pretty much hit the low of the day. So that's the one downside, especially if you miss. Like if I wasn't watching Regeneron out the open, so I didn't catch this gap until after the fact. And that is sometimes the downside of using these automated orders, because once that order opened, I basically hit the low. So it was like a 5-6% loss. But that's just a part of it's just a part of trading. But CTVI doing well. This TGX doing all right. Kind of flagging a new highs right now. You and I are both on this QSR, which again looks very good. I think through 68 too. Again, for now, we'll probably have to sell into 68, but eventually in time, we'll be buying.
I have no problem selling 68.
Yeah, I think a lot, like you mentioned before, it's like just selling into resistance has just been the move lately. So I'm in the same camp, just looking to sell into that. The only order I have in is this CORT, super tight risk. We were looking to buy this thing up through 30 a few months ago, back in November, as it was coming back up to this 30 breakout level. And now it's down here in the 20s, and I can buy it, 21 versus 2050.
Yeah.
And that's kind of the only order I really haven't at the moment.
Yeah. DXCM when you're done. That's like the only thing I'm looking at. That might be new. So DXCM, it did like a kind of fake sell off, but still holding the gap. Yeah, and just holding that low, Shake some people out.
Up to 112, or you want to wait for 116?
No, up through 112, inside day support by 112 versus whatever those lows are.
108, 107, yeah, I guess 108.
Yeah. Try to sell 120, 124. But we'll see. I mean, I got my hands full.
Right. I'm trying to think that's really it on my end. That's all I want to really go over.
Less is more in this environment. Less is definitely more. Try to tighten up, try to tighten those watch lists up to everyone listening. It's like I'm doing a lot of like trade reviews with people, and it's like the more trades they take is when they're getting in trouble, when they're focused and only taking, you know, a few trades a week of names they really like or setups they really like. That's the people who are finding success in this market.
Mhm.
So even me, where it's like, I had 32 names and then I cut it. I was like, what the hell is this watch list? And then I cut it down to 12 names, and I'm very focused about the price action on those names.
Actually,
So
I got one more thing. Actually, let me pull this chart back up. So we had this trade in Elf.
oh, that was so dirty. I was seeing that. You
Yeah.
got to break even though, right?
Yeah. So this was a big part again for me. Pretty much always. I'm always trying to find spots to move the stop to break even. So if we look at this, I'll even put this on like a smaller time frame. We bought through this 57. The day of it looked phenomenal. The day it triggered, day it closed, looked great. The next day it opened, and it opened like shit. It was coming back towards our price, and we would expect like continuation day 2 of this move, given the candle it had. But once it kind of opened like inside day, then lower and headed towards our break even. I was talking with Chris, and it was like, this just seems like a break even stop. Like I don't need to like get went $2 in our favor, but am I gonna give her 55? Doesn't really make much sense here when if it's going to come back to the breakout level, it's probably no lower anyways. So we were able to raise the stop versus our break even price, and we got out for basically nothing of a loss. And then they got smoked yesterday and got crushed today. And that's again,
was that sector wide? Is Ulta getting smoked?
let's see. No. Let's see what happens.
Wow, huh?
Unless it's just a
hard sell on
unless it's just like crazy profit taking up here, but it's too many news.
I don't know. Bear raid.
Like how you have it as a sell and it's at all-time highs. Yeah, I don't see anything. But again, this was just something where again we were expecting continuation day 2 of this breakout. It's blue sky, blue sky breakout, all-time highs. We're expecting continuation. We don't see it. We see lower high off the open the second day, and we see it hold 57. Intraday, and it was like, okay, if it breaks below this, it's going to head lower. Do we expect it to head, 10% plus launches? No, but we just tighten up our risk. We lost nothing. And now if this thing wants to go back to wherever it's going to drop to, we can come back to this trade with the full mental capital. So it was just, that was a good, just a good trade of, Regeneron kind of sucked where I wasn't watching it very closely and I, lost 5 or 6% in it. And then it was like Elf was watching it a little more closely and was able to get out of that one, break even, and then keep the other ones that are working just now.
Yeah, Regeneron, I don't think you can do anything.
There was that was like even like 15-minute rule, you were still getting kind of jammed up no matter what. It was still a loss no matter what, but it was just not watching it. The other thing I did see this little chart like circling around social media, stocks in 2021 versus 2022, and this is a really good example when we talk about rebalancing. And if you this is say, let's just pretend this is your portfolio and you owned all of these stocks from the beginning of the year. So this is like for 2021, it's the end of the year, this is your performance. This is a great example of why you want to be rebalancing, where you would be taking profits. So for NVIDIA, for example, this would be NVIDIA and Alphabet are pretty much your 2 big ones you'd be rebalancing from. So if you're up 100% NVIDIA, you took half the position off. So you had $1,000 in NVIDIA. It's now worth $2,000. You were to sell $1,000 worth of it to basically take back your principal. You then reinvest it down into Amazon. Even though NVIDIA gets smoked, it's kind of house money with what was left in NVIDIA. So it's not like you had 1,000, it became 2, it's now back to 1,000. You had 1,000, it became 2,000. You took 1,000 of it out, your gain. It's now only worth 500, but the $1,000 is you can put it back to work into your worst thing, which would be Amazon, which today it's still getting beat up. But this was just kind of a good example of showing like when people have those big winners last year and you don't take some profits in them, and then you get stuck with a year like 2022, you would have wished you took some profits. And this is just, which is one of those good examples of why you have these big winners. You got to take some profits on the table. So when the next year occurs and this happens, you've already booked some and you can, put it to work somewhere else. So just a little rebalancing lesson really quickly.
Like that.
All right, Shake. Other than that, anything else you want to touch on?
CPI 6.5, baby. Give us 6.5 and I'm getting rich.
All right. Only I got on my end is we're doing the 6th annual Milan trip next weekend. So if anyone's in the northern northeastern area, you guys want to come, we'll be in Killington. Shake, this is, I think, the coolest book cover we've published so far.
That one's sick, yeah.
This one is I think it's pretty badass. So again, any members who want any of the books, step 1 through step 7, it's hard to see all of them. You just order them, send me or Shake at the end of your order. We'll credit you the cost so you can get these for free. So
Get them for free. If it's free, it's from me.
yeah. All right, guys. That's it.